Shares of Tesla plunging 38% so far this year, with a growing chorus of analysts saying there are more losses to come. But the story from bond markets may be even more concerning. And of course, Lisa Abramowicz is all over that. Lisa?
Well, Scarlett, I wanted to take a look at how Tesla is sort of a poster child of what can go wrong when you lever up. If you take a look at some of their bonds maturing in 2025, you can see the prices have plunged to record lows. This are the lowest since it was issued in 2017. Just to give you a perspective of what this means, that means the implied borrowing cost now for this bond is 8.9%. That's the implied yield versus a coupon at issuance of 5.3%. The problem is this increases Tesla's borrowing costs at a time when it can ill afford such a loss of capital. It has $9 billion of debt, more than that actually, $3 billion of which coming due over the next 3 years. So if you think about how much more the borrowing costs are rising, that ends up actually making their capital situation that much more challenging at a time when their sales are faltering, they're lowering prices, and people are raising questions about the saturation of the electric vehicle market. So as the stock falls, and as you have a growing number of analysts, including Morgan Stanley, coming out with incredibly bearish calls, you have to look at the bonds and say, you know what, this becomes a spiral at a certain point, especially because Elon Musk himself is saying that it cannot avoid raising more capital in the near future. And you can just take a look at sort of the landscape here, not so positive.